Well, let's kickstart the show then by talking about all that's going on within the IT space. Now, given the fact that we understand from reports that a large number of deal cancellations and ramp downs by technology giants have to a very cautious approach by large IT firms, given the macroeconomic situation continues to remain challenging. Let's connect then with Ray Wang, who's Principal Analyst and Founder at Constellation Research, to understand just how severe the situation is and what the outlook is going down the line. Ray, thanks so much for taking time out and joining in. You know, if we look at all of the IT majors, for instance, Infy talking about a revenue impact from large deal cancellations, TCS as well losing a big $2 billion deal. Do you believe that this is perhaps a one-off case when it comes to large providers losing deals, or is this a niggling issue within the space as a whole?
I think we're just at the beginning of this, and what's happening right now is almost every company that we're talking to in the Global 2000 is reconsolidating and reconsidering what they're doing with their vendors. So it's not just the IT services firms, it's also the software companies, and it's also operational spend. There are two factors that are actually coming here. One is the fact that operational efficiency, they're trying to reassess where their position is going to be and what they want to do with their investments. That's what's driving the boards right now, and especially as it comes into planning. The summer is the season where all the planning is done for the next year.
So do you think that this, to a large extent, Ray, is going to put a lot of the IT vendors on the defensive when it comes to pursuing large deals?
You know, Avanne, you're right. They're going to go not just on the defensive, but also on the offensive. What we're seeing is every company is asking their IT services vendor to help them do more. So we're going to see consolidation. Now, the challenge here is we have a lot of deals that were made in the last 2 years that won't come up until 2024 and 2025. But in the interim, there are a lot of consolidation opportunities. So if you see more than one vendor and one services firm inside a company, you'll see consolidation. So if there are 12 vendors inside a firm, we'll see that whittle down to 4, right? So that's the level of consolidation that's happening in every boardroom at the moment.
So I just want to understand from your standpoint, given the fact that in the recent past, I highlighted some examples as well, how we've seen deal ramp downs, there have been cancellations, how bad really is the situation on hand?
The situation is not that bad, but it's at the beginning of the conversation. So for example, if you're in doing digital, you're in doing AI, well, maybe you'll be invited to come and do infrastructure or do cloud transformation. And this is where the consolidation is going to happen. Now, most clients don't want to put all their eggs in one basket. So they're going to have at least 2 or 3 of the IT majors there. Maybe they go to 2. Right? And then they'll have a whole bunch of the mid-tier IT service providers to come in to do specialty work. And so we're going to see a reshuffling of the board. I don't think deal sizes are going to go down. I think deal sizes, in fact, are going to go up, but it's going to be less number of deals for a little bit as we see that type of consolidation. The impact really is going to come on the BPO sector. A lot of what's happening in BPO should have been automated already. And with AI in place, we're going to see automation and AI take a toll on the BPO side, not this year, but we will see that 18 months from now as people try to understand where they can automate and where they can apply AI into each of these deals.
So what exactly is your outlook on the impact of this on the entire tech sector?
Well, I think the immediate impact is we're used to seeing 20 to 25% attrition in each one of the IT services majors. That will go away. I think what's going to be replaced is the ability to automate a lot of these tasks, automate code generation. But what won't go away is the human touch. And what's important in the human touch is information and misinformation. We need humans to train these systems. And so this is where we're going to see entry-level freshers come in. They're going to be working on the training capabilities, and they're also going to be working on trying to figure out what's human, what's machine, what's fully automated. So there will be jobs there. But you also have to keep in mind, the labor market is still very, very tight for IT services folks. And we still have more projects than we have people to fulfill them. And I think that's going to continue with AI. It's not going to take away all the jobs. It's going to shift what type of jobs are available and what type of people will be doing those jobs versus what type of machines will be doing those jobs.
Okay, that's interesting. You know, as we were talking about, you know, the IT vendors being put on the defensive when it comes to pursuing large deals, a lot of them as well are generally priced at very aggressive discounts with that margin benefit of, you know, the deals coming in toward the latter half of the deal execution. So do you think that right now it perhaps would be a prudent approach for some of these vendors to be a little bit cautious? And what is the outlook outlook on the overall spending environment? How long do you believe that it will continue to remain uncertain?
So there are a couple ways to view this, right? Since May of 2022, the World Economic Forum types, the Davos types people have been trying to psych the rest of the world into a recession. But India, the US, Middle East have proven that there is no recession. And what we're actually now moving out of the conversation about recession fears to when is the rest of the world going to be picking up? And I believe that in 12 to 18 months, what we're going to see is that APAC will have its recovery. Europe will have its recovery. Latin America will start picking up from there. And so the demand for IT services is still going to be very, very tight. So that's the forecast from our point of view with those assumptions. Now, other people believe that we're about to enter a recession, spending is going to end, interest rates are too high. But what we've seen so far is an amazing amount of resilience, especially in the North American market and especially in the Middle East. And if you look at the home market in India, the market is still on fire.
Okay. So do you think that, we are, at a time like this, given the fact that we're talking about a shift in deals and, vendor cancellation happening across smaller deals, do you think that there will be a loss or a revenue loss from the client that'll largely impact, some of the smaller deals, the bottom of the pyramid, if you will?
Yes, it's going to happen in all different areas. It's not just the large deals, it's the small deals. So let's say an IT major in one area had a $100 million deal. It'll be picked up by another IT major in another area. So we're going to be trading deals back and forth for quite some time. It's the net effect. It's probably going to net out to be about the same. But the impact and the psychological impact of losing a $100 million deal in year 5 of 7 is going to be huge. However, because of the consolidation that's going on, there's still a lot of work in cybersecurity, a lot of work in cloud transformation, a lot of work in data projects, because those are the foundation for how AI is going to work. And so that combination means there's still going to be a lot of work for everyone. It's a question of what high margin projects you get and what low margin projects you start to automate. That's where the consolidation is going to occur. And it's going to be $1 million project, and it's also going to be at the $1 million project level.
Do you think that companies now, Ray, will have to really look at more technology-enabled partnerships with their clients in order to, get in a bite of that large deal pipeline in an environment that is a bit uncertain?
Avanne, that is exactly correct. That's where we're going to see the leverage, your ability to work more tightly with vendors and other partnerships, the public cloud vendors on the AWS, the Google, the Microsoft, the Oracle Cloud Infrastructure, the IBM side, and then, of course, the specialty vendors in the vertical industries that are providing capabilities. And then what we've noticed is a lot of these IT services firms, from TCS to Infosys to Wipro to Persistent, they've built their own products and solution sets. And that's also going to create differentiators as they continue to move up the stack.
Okay, so what is the outlook then when it comes to integration of AI and analytics and data as well for some of these large cap IT as well as small cap IT firms? How important is it for them to focus on this aspect of digitalization?
Digitization is here, and we're still in that second phase of digital transformation as we go from analytics to automation and automation to AI. While we're doing that, there's going to be really important to get data and data governance capabilities and skills in place. That's where people are failing in AI. We've got a lot of projects and POCs in AI. Most of them will probably fail because they don't have enough data to get to confidence level. So if I told you my AI-based physician is 89% accurate, would you see my AI-based physician or would you see your regular physician? Most people would say, I want to see my regular physician. Well, 89% confidence is probably not good enough for medicine, but over time, it'll get to 93, it'll get to 95, it'll get to 97. If I tell you that your self-help customer experience is at 7%, most people would be okay with that. And so right now it's finding the unique data sources, the ability to actually get to a confidence level that's okay for the market, and to build trust with your stakeholder on that data. This is why a lot of AI projects are going to fail, but we're going to have a lot of work being done in data management to get to some level of automation with the data that we're confident with.
And, Ray, since we have you with us, just wanted to get in a quick take on the issue when it comes to overall attrition within the IT space. That continues to remain quite a prevalent issue. So how are you looking at, the overall problem of attrition within the IT space? Are you seeing things reversing soon?
We are still not seeing things reversing in the attrition levels for IT services firms. I think the biggest challenge right now is getting freshers to come and stay. They learn for 2 years and they leave. And in enterprise software and in IT services, that average age continues to go from the 40s into the 50s. That is the challenge, because new graduates are being asked to do many more exciting things than in the enterprise, going to startups on the nifty 50, even working on the government jobs that are being provided on the public sector side. That's all creating a lot of competition for those jobs, and we still do not have enough workers. This is why when we say automation and AI are going to come in to take away your jobs, I think the answer is yes, but I also think there will be opportunities, yes, for new graduates as well as other individuals, because there's still too much work to be done.
Ray, it's been a pleasure having you on board. Thanks so much for joining in and throwing light on all that's going on within the IT space, the deal ramp downs, the adoption of technology, and what the road ahead looks like for the space.
Take care. Have a wonderful week.